Hi guys, welcome to Gold Price Daily Analysis. Today is Wednesday, the 19th of June 2019. This video is brought to you by the coach. Remember always, our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. I do urge you to check out the description of this video for the link of the Telegram room. At times when there are important updates or trading opportunities, we could reach to you through the Telegram. Also, I do urge you to check out our last two videos in order for you to get the best of this video. We are going to start our cornices right after a quick recap. We have been waiting for important economic headers to be released from the European Union. What matters for us is the ECB President Mario Draghi's speech. He mentioned clearly that more quantitative easing is expected from the European Central Bank. We do believe that this is going to put additional pressure on the Federal Reserve Bank of the United States. For the economic calendar and from the United States also, we have been waiting for so many economic headers to be released. What matters for us is the building permits for May came below forecast. The other data were mixed, and for the red box, month to month and year to year, both came above forecast with low importance. For the gold price action on the last trading session of Tuesday, gold as expected had a one-of-a-kind rally. Gold made it 1,354 plus on the back of the negative sentiment promoted by Draghi, the president of the governor of the ECB. Anyhow, an announcement of a meeting between the US president and the Chinese president pushed gold down toward 1,340 plus. It recovered back to 1,350. Now it's trading about 1,346. That's all. We'll be moving now to the strategy recap. In our last episode, we said that due to the highly anticipated volatility in gold market, we are not going to issue a trading advice or a trading signal, but we are going to analyze, and this is what we have done actually in the last episode. We said that gold is most likely ended a correction and it will move up higher toward 1,357 as a target. Actually, gold made it to 1,354. We also gave a guidance that due to high volatility, buyers shall look for 1,324 as a stop loss or the low of the last trading session. That's all. We'll move on now to the economic calendar. On the economic calendar for Wednesday, we'll be waiting for the following economic headers from the United Kingdom: the CPI month-to-month for May and the CPI year-to-year for May, and the PPI input and other economic headers. From the European Union, we'll be waiting for the ECB President Draghi's speech. He will be having another speech due tomorrow. That's all from the European Union. Moving on to the United States, we'll be waiting for very important economic headers to be released: the Fed interest rate decision, FOMC economic projections, FOMC statement, and the press conference, all to be considered as highly market movers. That's all for the economic calendar. Now we'll move on to the technical indicators. On the last trading session of Tuesday, we have had a trading range from 1,338 plus to 1,354 plus. Numbers are rounded and the market is still open. For the closing price, gold spot is expected to print a close price above 1,346. The number is rounded and the market is still open. For the daily simple moving averages, gold is trading in a bull trend above its all daily simple moving averages. And for the RSI readings, for the 30 minutes is 51 bullish with a positive momentum, and for the 1 hour it's 54 bullish with positive momentum, and for the 4 hours is 57 bullish, and for the 1 day it's 71 overbought. As we see, we have a very fine bullish setup with a positive momentum in the short term. For the supports and resistance, the first support is 1,338 followed by 1,332, and then finally the killing spot is 1325. For the resistance, 1351, followed by 1357 and 1365. It's both of them are tough resistance. That's all for the technical indicators. We'll be moving now to the trading strategy. Technically, gold is trading in a bull trend above its daily simple moving averages. The RSI readings are relaxed in most of the charts with overbought indication on the one-day chart. Worth noting that technically gold holding ground above 1325 is a plus point, and the fact that the gold managed to stay well bid in today's session with the news about the soothing down of the situation between US and China is also a plus point for the trend. For the fundamentals and sentiment, gold rally was fueled with four main fronts. US-Mexico trade conflict, it got solved. US-China trade conflict, it's cooling down. For tension with Iran, nobody can tell. And for the hopes of the rate cut, this is what we are going to know by tomorrow. So if we are talking about fundamentals, gold lost almost two winning cards for this rally. One thing you have to keep in mind that with the last statement from the ECB Governor Mario Draghi, odds that Fed won't cut interest rate is less. Most likely Fed will announce the end of the tightening policy, or the quantitative tightening, and the start of the quantitative easing. If that is the case, gold rally could be extended to 1400. Otherwise, it will be heading to 1250. For the trading idea, as we said in our last episode, we are not going to issue a signal until the FOMC statement is out. It's just a forecast. If gold closes above 1346, most likely it will head higher above 1351. If US dollar suffers a meltdown due to the expectations of a rate cut, gold could make it to 1357 or above before the FOMC statement is out. Gold is not supposed to find acceptance below the last trading day low. And one thing worth noting that from the trading volume perspective, the trading volume in the last trading session was clearly high and enough for gold to blast in the coming trading session of tomorrow. Thank you guys for watching this video. Please share, like and subscribe, and I will see you tomorrow in another video.